Time to run the numbers, and that means a look at the day's biggest business news. And we're starting with the pharmaceutical company Pfizer, which sent global shares soaring on Monday when it announced the results of the latest test for its coronavirus vaccine. That boost also helped the company's CEO earn more than $5 million from selling shares. For more, let's speak to our business editor, Stephen Carroll. Stephen, the timing of this sale raising some eyebrows. What more can you tell us?
Well, Albert Bourla sold 132,000, just over, shares on Monday at a price of just under $42 each. That was near the peak that it reached that day after having soared on the news that their coronavirus vaccine was proving effective in late-stage testing. Now, that sale earned Albert Bourla $5.6 million. It was 62% of the shares that he owns in the company. But it was a share sale that was actually agreed to back in August of this year. The rules that govern insider trading in publicly listed company mean that executives have to decide in advance if they want to sell shares, and they set the number of shares they want to sell, the time period over which they want to sell them, and the price. So effectively you could set, for example, because we don't have the exact details of what this agreement says, you could set a price limit of saying, for example, if the share price hits $40, that's when you want to sell, and you could set a time period over which you want to sell those shares as well. So that's how it came about that Albert Bourla got such a large amount of money for selling these shares. That was close to the highest price that Pfizer's shares have seen over the past 12 months. But he's not alone among pharmaceutical executives to have sold shares this year. Overall at Pfizer, executives have gotten some $15 million from share sales, and that's actually quite a small amount comparative across the industry. Take the Pfizer's rival Moderna, also developing a coronavirus vaccine. Executives there have sold shares worth more than $260 million this year. That, of course, also raising eyebrows. Those share sales taking place under these very strict insider trading rules. But despite comments that came from the US stock market regulator, their CEO saying earlier this year that executives shouldn't indulge in big share sales during the pandemic, not because it was illegal or inappropriate, but because it doesn't look good.
Right, not exactly a good PR strategy to be seen as potentially profiting off of people's pain in this pandemic. Stephen, it's the holiday season, which means that a lot of new products are hitting the market. Sony's new PlayStation goes on sale today, and the company has high hopes for record sales. What's making them so optimistic?
Well, that's because of the huge pre-orders they've had for the PlayStation 5. There were certain Japanese retailers that were getting 100 times the requests for pre-orders that they could cater for. And that's partly because of the popularity of video gaming during the pandemic, but also because of supply chain problems that games console makers are having. They're having difficulty keeping up with the increased demand. Sony's expecting to sell over 7 million PlayStation 5s before the end of March. That would be far more than the PlayStation 4, which since its launch back in 2013 has sold more than 112 million units worldwide. Now, this comes at a time that Sony's rival Microsoft has also just launched its new Xbox that came out on Tuesday. So those two will be competing heavily for this growing market for video gaming. According to the industry analysts Newzoo, they say that the video game console market will be worth some $45 billion this year, and that's a figure that's growing. More people spending time at home means more time playing video games for some. Newzoo says that there are now 2.7 billion gamers worldwide, and that's a figure that's growing too.
Yeah, we need something to fill all that extra time at home, definitely. Stephen, finally, can you give us a look at how the markets are trading today?
With that rally that we'd seen since the start of the week on the news of Pfizer's and BioNTech's coronavirus vaccines effectiveness, that rally cooling off today in trading. European shares actually down at lunchtime today, not wiping off the gains that we've seen in recent days, but nonetheless a sign that investors are taking a bit of a breather from the optimism that's dominated trading so far this week. We're also seeing a bit of a rotation from the trends that we've seen earlier in the week. For example, earlier on we had seen airlines were doing quite well, quite big gains in airlines around the world on optimism that a vaccine might help travel get back to normal. Today in trading in Europe, IAG, the owner of British Airways and Iberia, down around 1.8% in London a short time ago. Ryanair, the Irish low-cost airlines shares, also down over 2% in trading too. The flip side of that is the so-called stay-at-home stocks, the tech companies and the likes of Zoom, for example, that have been doing really well this year because of the pandemic. Their shares have taken a tumble in recent days on perhaps hopes that we might be able to spend more time out and about and doing things, but we've seen those gains return to those stocks today in trading and towards the end of Wall Street yesterday as well. This is as investors are sort of balancing out the rising number of coronavirus cases on one hand and looking at the difficulties of how those vaccines are going to be rolled out in terms of both capacity but also the extra storage they're going to need. So plenty for investors to chew over. For now anyway, they're taking a breather from those gains we saw earlier in the week.
Stephen Carroll taking our business desk to his home. Thank you so much for joining us for that update. I'm going to